In a world where cryptocurrencies oscillate between celebrated technological marvels and the subjects of regulatory scrutiny, Hong Kong stands at the precipice of change. With a rich history of finance and a reputation as a global hub, how does this metropolis respond to the crypto challenge? The last few years have painted a tumultuous picture for cryptocurrencies, from skyrocketing prices that have made early adopters overnight millionaires to jarring crashes that evoked memories of the dot-com bubble. The journey of digital assets like Bitcoin, Ethereum, and countless others has been nothing short of a roller coaster. More than just market volatility, the crypto world has faced another looming challenge: regulation. Governments worldwide grapple with the question of how to regulate these decentralized entities. From complete bans in some nations to laissez-faire policies in others, the global landscape has been fragmented at best. But as the adage goes, where there's chaos, there's opportunity. And no place seems to recognize this better than Hong Kong. Despite the wider world's apprehensions, Hong Kong has made a resounding statement by issuing its first licenses for retail crypto trading. It's a significant move, signaling not just acceptance, but also a keen interest in embracing and harnessing the potential of virtual assets. Why this embrace, and why now? Hong Kong officials have long recognized the inevitable presence of cryptocurrencies in the future of finance. Julia Leong, the Chief Executive Officer of Hong Kong Securities and Futures Commission, SFC, put it succinctly, stating that the city's objective isn't necessarily to transform into a crypto trading hub, but rather to acknowledge and integrate crypto trading as a vital component of the modern financial ecosystem. This attitude is underscored by the SFC's recent green light to two significant players in the crypto exchange arena: Hashkey Exchange and OSL. Their regulatory approval, coming after a careful vetting process, marks the start of a new chapter for Hong Kong's financial sector. While Hong Kong is charting its course, it's essential to view this in the broader context of global crypto developments. Major entities like FTX, Three Arrows Capital, Binance, and Coinbase have faced significant hurdles, either through market dynamics or regulatory challenges. Moreover, prominent voices like Chamath Palihapitiya have cast a shadow of doubt over crypto's future in the US, further highlighting the contrasting approaches of different jurisdictions. Mainland China's ban on cryptocurrencies stands in stark contrast to Hong Kong's progressive stance. This divergence raises eyebrows and brings up the complex dynamics between Beijing and Hong Kong. Neil Tan, chairman of the FinTech Association of Hong Kong, sheds light on this, pointing to the one country, two systems principle. This framework guarantees Hong Kong's autonomy in financial matters, allowing it to craft its regulations, even if they diverge from mainland policies. Could Hong Kong's foray into crypto be an indirect method for Beijing to gain oversight and influence over the industry? Only time will tell. As we look to the future, debates rage on. Some experts, like Lu Fangzhou from the University of Hong Kong, feel that the city may be late to the party, believing that the global crypto boom might have peaked. Others, like Dave Chapman from OSL, see this as just the beginning of a transformative journey, with blockchain's potential yet to be fully realized. Whatever the perspective, one thing is clear. Hong Kong, with its mix of robust regulation, strategic positioning, and a forward-looking approach, is gearing up to play a pivotal role in the future of digital assets. In a rapidly changing financial landscape, with the lines between traditional and digital finance blurring, Hong Kong's crypto ambition paints a picture of adaptability, vision, and resilience. As the world watches, this city is poised to write a new chapter in the annals of cryptocurrency history,